Hello, traders. Gary Wagner here. It is currently 12:04 in Honolulu, 6:04 in New York on Thursday, 29th day of September 2022, and this is the daily report for gold and silver. After yesterday's dramatic upside move of $35, gold held up rather well today, giving up only $1.20. That is 0.07%, with the December contract currently fixed at $1,668.80. That in light of some moderate dollar weakness, down 0.5%, and currently fixed at 111.95. In terms of silver, silver gave up almost the same amount as the dollar declined, 0.45%, with December silver currently fixed at $18.79.5. Although I believe that the dollar will inevitably move considerably higher, with their upper limits at around 120 on the dollar index, I also believe that it's highly likely that we will see a dip or a short-term correction based on recent action, how much the dollar has moved, and how quickly it has done that. If in fact that is correct, there are a couple of levels that I would look at as potential levels of support. The first level comes in at 110.676. It is not based upon a Fibonacci number, but rather simply on this top right here, where we certainly saw this price point act as resistance. Below that are 2 points, the 23.6% fib retracement, as well as the 38.2% fib retracement. First, to the 23.6% fib retracement, 108.77. It has some pretty good historical referencing in that we have this top that occurred here around July, and then the lower level, which is at 105, the 38.2%, has even more historical data as being an area of resistance, as well as an area of support. So in terms of historical data, I believe that the strongest level of potential support, should we see a sizable dip, will come in at around 105, which is why I believe that if we do get a solid correction short term in the dollar, we will get a reciprocal upside move in gold. Now, it's a matter of positioning ourselves at the proper price point, but once we do enter the trade, of course, the first level that I'm going to want to look at is 1680. 1680 has got so much historical data showing this is a price point of support on multiple occasions. We can go back further and see a period over a month and a half in which it acted as support, and prior to that, this acted as resistance. In terms of the real level of resistance, because that shouldn't be an issue, I'm shooting for around 1700. That is the 61.8% fib retracement. However, because we have seen gold drop by such a large value so quickly, I believe that any kind of relief rally or some kind of a fourth wave, because according to our current Elliott wave count, and it is a bear count, we have just finished our third wave and are now headed into our fourth wave. As you can see, our projection first comes in at 1695, but the real brass ring comes in at approximately 1720, and I think that would be achievable. Of course, we will send out a trade alert via SMS and email once applicable. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.